We're on mute. Hey, everybody. Hello, hello. This is the first time I am actually doing live stream across like my many networks here because tonight's conversation is all about this article that you've been hearing about. Like, oh, people with high credit scores are going to be um, penalized by the FHA for having high credit scores. And I, along with other people within my real estate network, were trying to figure out what is going on, what's happening. And a really good article came out today that uh, described what's happening. So I thought I would share it with all of you. But before we talk about that, first of all, like the video, everybody, no matter what platform you're on, give me a thumbs up, say hello so that the algorithms can bless us. It can push this content out further. Shar is saying greetings to everybody. The second thing is let's gossip a little bit as well. Did you all see the news that Tucker Carlson is out at Fox News? Tucker Carlson is out. If you're on social media, you probably have seen the news about Tucker Carlson. But not only Tucker Carlson is out, apparently Don Lemon is out as well. So Tucker Carlson is with CNN. They pushed him out. They fired him, whatever. And now Don Lemon at the same time is out at CNN as well. I put a community post up for my Black Women Making Money YouTube page saying, ladies, nobody's safe. Everybody better watch out right now because just because you have high ratings like Tucker Carlson did doesn't mean you're safe, etc. So, hey, selfish love. I knew TC didn't have long. I wasn't sure. I didn't know. So, hey, D'Ambrosia, they cleaning house. Well, they're doing step one. We will see what else happens. Probably had to cut costs. Don't watch, but I know they are the higher paid people. Yeah, they absolutely are. They were making tens of millions of dollars a year. So, yeah, absolutely. But not only are Tucker Carlson and Don Lemon out, but also you all remember the whole Bud Light issue. I'm actually going to share my screen here so that you can take a look at this as well, because apparently um, the Bud Light executives that did the whole Dylan Mulvaney thing, they had so much blowback from this. They lost so much money on this that apparently they're on a quote unquote leave of absence for this as well. So, one thing I thought about when I thought about this story is that one person can F up your business. One person can cause a problem. And depending on whether Bud Light can get back or not, back on like not only Bud Light, but Anheuser-Busch, because a lot of people were um, saying that they are going to boycott all of Anheuser-Busch. So imagine you work for Anheuser-Busch, and because some person made a wrong move in marketing, your job may be at risk in this economy. Like, it's not just enough for you to be on your P's and Q's for yourself. Now you have to look after other people as well. So she made this decision, or whatever group of people made this decision, to put Dylan Mulvaney on the can of Bud Light. They didn't know their audience. And in business, we have to know our audiences. They didn't know their audience, and this is what happened. So, not only do you have Tucker Carlson out, you have Don Lemon out, and now you have two of the executives over at Bud Light that are on a quote leave of absence. Even though they may get a severance payment, we'll see. We'll see what happens. So, hey, Denise. Hey, D'Ambro. Oh yeah, D'Ambrosia's here. Everybody's saying hello. Mentor Shelley is in the building. Just talked about them in a live early. I got to catch you live then, Mentor Shelley, because yeah, look. But I heard they lost sales. They lost sales. They lost market valuation. Yeah, I mean, they're having a tough time right now. Very tough time. And unfortunately, the people that they went against, their core audience, I don't think they're going to forgive them easily, Rose. Fox couldn't fire TC during the Dominion trial. Maybe he couldn't. He may be on an NDA right now. So, hey, Dark and Lovely. Yeah. So, everybody, I'm like actually on all of my platforms tonight, including my LinkedIn and my Facebook and things like that. So, um, this is bigger than the Black Women Making Money gang, just because I wanted to share this piece of information with everybody because it has to do with real estate. And so many of you who are in my network either are homeowners, want to be homeowners, you have kids that are going to be homeowners, etc. And you may have seen a lot of the comments and a lot of the news articles saying that the Biden administration is now punishing people who have good credit with regards to charging them extra money than people who have poor credit when it comes to getting their mortgages. And I am here to say that that spin is not correct. It took me all weekend, and I work with a group of very smart people, and we were talking about it on Friday. We were talking about it throughout the weekend by email. We're all in real estate, and we're like, what is going on? And finally, today, we have a news article that actually explains what's really happening and kind of um, lessens the hype. Let's just say that. So, Dark and Lovely is also saying Jeff Shell, CEO of NBC Universal, is out. I saw that as well. I saw that as well. He is, because people are tired of an agenda. Yeah. Well, look, I get that as well. Look, I was team conservative when it came to this. So, all right, everybody. All right, let's get down to our discussion. This is here from Mortgage News Daily. Mortgage News Daily uh, is a service that actually talks about what's happening with mortgages. And today, their topic was all about, is there really a new unfair mortgage tax on those with good credit? High credit. So let's read through this, and we're going to take our time reading through this so that way we're able to get the right information with regards to what's happening here. So, seemingly overnight, the internet was awash with news regarding a new unfair tax on mortgage borrowers with higher credit scores. Some have gone so far as to suggest that someone could intentionally lower their credit score in order to get a better deal. Before you start paying your bills in hopes of cashing in, let's separate fact from fiction. First and most importantly, you will absolutely not get a better deal on a mortgage rate if your credit score is lower. Even if your nephew just texted you a screenshot of a news headline saying 620 FICO score gets a 1.75% fee discount and 740 pays 1% fee. So we saw these headlines. If you all saw the headlines, put a one in the chat. You saw these headlines circulating Friday, Saturday, Sunday, maybe even earlier today, and you're like, what is going on? Put a one in the chat. Let me know if you were seeing these headlines. And they were very politicized. They were like, yeah, the Biden administration is doing this. And I always like to read the articles because I'm like, why are they doing this? This is not making any sense. And nobody was giving any details. Yeah. So you all were saying one. So you were seeing it too. Well, now we have an answer as to what was happening. Okay, so they're saying here this all has to do with changes to loan level price adjustments imposed by Fannie Mae and Freddie Mac, the two entities that guarantee a vast majority of new mortgages. So basically, for most of us who are buying our first homes, we get a guarantee from either Fannie Mae or Freddie Mac. So, um, some of your FHA loans and things like that go through Fannie Mae and Freddie Mac. Okay. So the LLPAs are based on loan features such as your credit score and the loan to value ratio, among other things. So loan to value just means if I'm borrowing, if the house is worth 100,000 and I'm borrowing 80,000, I'm borrowing 80% loan to value. That's all that means. Okay. They've been changed several times over the years, and a fairly substantial change was announced in January of this year. So, even though this announcement was done in January, people are just getting hip to it now. And it's saying here, wait, this news is from January. Why are people talking about it now? Yes, in fact, we already told you about it. This is this group of people here. People are confused because they don't understand how, quote, delivery dates work when it comes to Franny and Freddie. Changes that impact fees and guidelines are almost always implemented based on the date the loan in question is delivered to Fannie and Freddie. Delivery in this context typically occurs a matter of weeks after the loan is closed, although it can be more than a month. Now, consider that a closed loan has often been quoted and locked for more than 3 weeks. Call it a month to be safe. Since these changes go into effect on loans delivered on or after May 1st, 2023, lenders began to implement them weeks ago. So, ladies, this is stuff that was happening weeks ago and you weren't even privy to it. Okay, ladies and gentlemen, I should say, because this is across all my media platforms here. Okay, so it's saying here many lenders implemented them months ago, especially for loans that are locked for longer periods of time. They're asking a question here. So low credit borrowers are already getting a discount while high credit borrowers pay more? They're saying here, not exactly. And this is where the confusion comes in. Also, from here on out, please note that there is no opinion offered here as to whether this is good, bad, etc. The only goal is to clear up confusion and offer facts. The fact of the matter is that the LLPAs are indeed changing in a way that improves costs for those with lower credit scores and increases costs for those with high credit scores, in many cases anyway. But people are confusing the change for the actual cost. So keep with me, ladies and gentlemen, and you'll be able to see what they're talking about here. So they're saying here a low credit borrower isn't paying less than a high credit borrower. The gap between what they pay is just smaller than it was. So basically, they're saying, yes, basically, they're saying that the low credit borrower is not paying less than the high credit borrower overall with regards to the total dollars. There was at one point a greater gap between people who had good credit or great credit and people who had poor credit. All they've done was they've shrunk the gap. Put a 2 in the chat if you understand that difference. So, what they're saying is they're not saying that people who have high credit are going to pay more than people who have low credit as a total dollar amount. All they're saying is that they've closed the gap between what people who have high credit are paying and what people who have low credit are paying. And you all are saying too, good. This goes to show you, and I should have pulled up the articles, the highly politicized articles, how people can take something, misunderstand it, spin it. And the truth is, I honestly think, and politics are politics, we talk about politics over here. I honestly think that Trump or DeSantis or whomever the Republican nominee is going to really kind of push this out there, this narrative out there, because this is harder to explain than just saying they're punishing you because you have high credit, you know? So be prepared, be prepared during the political season for this to um, be misreported. D'Ambrosio still saying, I'm unsure. Okay, D'Ambrosio, we'll say it one more time. All right. So, what is happening here is at one point, people who had high credit scores had to pay a fee for the FHA guarantee, the Fannie Mae and Freddie Mac guarantee. And people who had low credit scores also had to pay a fee. I should do it like this. However, the people who had low credit scores had to pay a super high fee than the people with high credit scores, right? There's still a difference. So, D'Ambrosio, all that's happening here is they have lowered the fee. Move my hand over here. They've lowered the fee for the people who have lower credit scores. They've slightly raised the fee for people who have higher credit scores. So the gap is lower. But they did not set it up where people who have high credit scores will pay more than people who have low credit scores. So your goal is still, as you are buying a house, to have the highest credit score that you possibly can. I hope that makes sense. Rose is saying here it's just a ploy to get more suckers in. Oh my goodness. Look, I mean, this is one of those things with regards to I mean, let me not say that. We're not going to be political on this thing here because I'm doing live broadcasts to like all of my social media channels. So we're just going to stick with the facts here. Okay. So, how about some color coded charts to be sure? So I felt like the charts, I mean, if you really want to analyze them, you can. I'll put them in the what do you call it? In the in my YouTube for all of you ladies here from Black Women Making Money. But I think the explanation I gave you would be good enough. If you all want to like actually see the charts and geek out on them, you can. So then they're saying, yes, it's a big change. So why is the government doing this to people with higher credit? Fannie and Freddie technically have a mission to promote affordable home ownership. Here is the statement from on the topic by their regulators. Note in the first two tables that there is more of an improvement for the lower FICO rows on purchases. So basically, Fannie and Freddie have a mission to promote affordable home ownership. With the rising interest rates and people having so many problems actually getting into housing, it seems like Fannie and Freddie are like, how how are we going to help more lower income people while still, I believe, while still bringing in enough money to fortify their risk. And that's the reason why I think they're doing this. That's the reason why I think they're doing this. Dan Brazier, you're saying thank you. That makes a little more sense. I'll get it eventually. Just need to do more research. Okay, absolutely. Yeah. And all of my ladies and Black women making money. Yeah. Don't forget to sign up for the email list, my exclusive content. So I'll have my Wealth Wednesday email going out to you, ladies. It's a good one. Henry is saying, great to educate people on these topics. There are lots of misinformation out there. Yeah, absolutely. And that's why when I saw this article, I thought it would be a great way to bring it to you. So, a little bit more here. Any other misconstrued news I need to know about. So they're saying, yes, while not as viral as the LLPA stuff, there has been a fair amount of press on a new 40-year FHA mortgage. They say in all caps, there ain't no new 40-year FHA mortgage. There's no 40-year FHA loan. Lenders who collect payments on FHA loans have a new option to offer loan modifications with terms of 40 years to borrowers who are unable to pay their existing FHA loans. So that's probably some of the misinformation that's happening with the 40-year loans. I wouldn't be surprised, though, if you start getting banks and certain other entities starting to do 40-year loans because people need a certain payment for housing. And if housing is going to keep going up and up and up, and mortgages are going to keep going, sorry, and housing costs are going to keep going up, up and up, and the rates are going to be higher, it wouldn't surprise me if this is being tossed around. So, um, don't you usually talk about financial markets in this newsletter? So they're like, yes, but we decided to talk about this today. So that is the article here, ladies and gentlemen. It's called "Is There Really a New Unfair Mortgage Tax for Those with High Credit?" I am going to actually put it for my Black Women Making Money ladies here. So that is there, and you all can grab that article from the chat. And of course, I am live on my other social platforms as well, my LinkedIn, my Facebook, my YouTube, my Simply Funded channel. So I want to say hello to everybody. With regards to that, I hope that that information just kind of cleared up some of the misconceptions that's happening with regards to this news story. And hopefully, you'll be able to explain that to other people as well as you all are having these conversations. But like I said, all I saw was the presidential debates, and I'm just and they kept saying Biden administration did this, Biden administration did this. You all know I don't really care about Biden, Trump, DeSantis, etc. But I, even with my patriotic glasses, but all I can see is the big mess that is potentially going to happen with regards to the presidential elections and what was approved and done. And the truth is, it is something that will ultimately help people. It'll help more people who have lower credit scores to be able to afford the loans that they're getting. So, um, and afford to be able to get into housing, which is part of the American dream. So that is it. I did want to say that if you are looking for funding as a real estate investor for any kind of houses that you're purchasing as a real estate investor, simplyfunded.com. Simplyfunded.com is where you find me, or Get Funded Simply is where you can find me. And other than that, I will talk with all of you in the next couple of days. Take care. Bye, everybody.